Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about day trading. More specifically, we're talking about gap trading. Gap trading is by far the single most consistent and most profitable day trading strategy available across the markets today, bar none. So what I do is I teach a course over at LazyGapTrader.com, and I also let folks that have taken my course subscribe to get my gap trades each and every day. So what they get at 9 o'clock in the morning Eastern Standard Time is a list of the gap trades that I've identified before the market even opens as price levels where I'm willing to either buy or sell short a stock. So let's go over what is gap trading. Gap trading is when we have a stock that's gapping higher or lower at the open as it relates to yesterday's close or the prior trading day's close, and it's gapping up or down enough to where it catches our attention, creates an opportunity, because stocks that are moving create opportunity for traders that can do what? That can identify an area or a price where that stock should have a price reaction in the other direction. We're looking for price levels where a stock has the highest probability to have a price reaction in the other direction. This is at the heart of what I teach in my course at Lazy Gap Trader. I teach you how to find these price levels, how to calculate using simple math where the most likely and highest probability area is where a stock is going to have a price reaction in the other direction. Let's take a look at the email that went out to subscribers at 9 o'clock, 30 minutes before the market opened this morning. We had 5 possible gap trades on the board today that I identified: Hyatt Hotels, American Eagle, Devon Energy, Halliburton, and Autodesk. So American Eagle and Devon Energy, they didn't hit their levels, so they become no trades. They're off the board. Hyatt, Halliburton, and Autodesk did hit their levels, and they became tradable opportunities. We're going to go back to the charts and discuss them individually. But real quick, Hyatt Hotels, $51.15. That was a support area because I'm saying gap lower. Stop and profit target is about 30 to 45 cents. Halliburton, gap higher, $50.99 and $53.74. This one's interesting. We're going to talk about this one also. And Autodesk, gap lower, support levels are $71.39 and $69.49. Stop and profit target 45 to 60 cents. We're going to talk about this one too because there's an argument on both sides of the trade as usual. First up, we'll talk about Hyatt real quick. Pretty simple equation. The price level we were willing to buy the stock at was $51.15. Why? Because that was the highest probability location where this stock would have a price reaction in the other direction, and what happened was it traded through that level a little bit. It was well within the stop loss limitation, and then the stock rallied and gave us our profit that was also cited in the email this morning. So that was a winner in the books. Hyatt Hotels, pretty stress-free trade. Next up, we're going to talk about Halliburton. Now, the reason I'm bringing this one up in this video is because it's a very important lesson, and there was a very specific reason why this was a no trade, even though this stock came through both levels. These were 2 shortable levels today, $50.99, $53.74, and both levels were off the table immediately, and there's a specific reason why, and it's all discussed and taught throughout the course. And these are the trades that can be the most important trades. These are the trades that save you money. If you shorted at $50.99, look what happened. Nobody likes to feel like that. So it's the important trades, it's the ones we don't take, sometimes are the ones that save us the money, are the ones that make our P&L for the month look really, really good. So very important this chart lesson on why not to take this trade not once but twice, taught and discussed throughout the course. By the way, that's another reason why if you're just getting my gap trading alerts in the morning and you haven't taken the course, it's another reason why you really should take another look or consider taking the course, because there's a lot of information in there that you would never know by just getting my trade alerts each and every day. It's one thing to have a price level. It's another thing to understand how to use it to your advantage. The last one we're going to take a look at is Autodesk. And this is controversial because The stock traded through its stop loss by a few pennies. Therefore, some traders may have gotten stopped out. And today, I actually did not get stopped out, and I held on to the position. I gave it a little more leeway on the downside. I was willing to give this stock as much as $1 on the downside. The stock made a low in the third 10-minute candle of the day at $70.55 within that $1 that I was willing to give it. But in the course, I teach specific parameters. So if traders got stopped out, this is one of those trades where it's part of the business. This is just the way it works. Sometimes we win, sometimes we lose, even when we're right. You can be right on a trade and still lose, and that could have been the case today. But the point I want to make is, again, the power of these price levels that I teach you how to calculate throughout the course. $71.39. Yes, the stock traded through the stop or the recommended stop loss by a little bit extra, but you can see the power of these levels and how the stock reacted, bounced higher, and rallied throughout the remainder of the day and gave a nice profit to somebody who was willing to have a little more leeway with the stop loss limitation. And that's up to the individual trader. What I give in the course is guidelines. Each trader is obviously responsible for their own risk tolerance. And with that, I'm going to leave it here tonight, folks. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.